Alrighty, traders, good afternoon, good morning, good evening, and welcome to the special session here with the analysts here at Market Traders. Let's see, what's going on with the market? We've got coronavirus, we've got stock market going crazy, but you know what? We've got a panel of traders right here that's going to talk all about those details and why it's important to get involved in the Forex market right now. A lot of great opportunities. We're going to look at the technicals. We're going to talk about the news, the fundamentals, and what's driving the market, and how we can take advantage of that. Hey, my name is Gary Fichardt, Director of Trading here at Market Traders, and I've got a special guest, two special guests in here. One of my special guests is going to be Chris Pulver. Let's go ahead and take a look at the panel right here. This is the panel. Chris Pulver, good afternoon, buddy. How you doing?
Good, Gary. Thanks, everybody. How's everybody doing today?
Good. Well, we're doing fantastic, Chris, man. And we're excited to hear about you guys, excited to hear about what's going on in the market. And we've got Tad DeVan. Tad, how are you doing, buddy? Good. Well, this is a session that we haven't done before. This is something completely new. We're excited about it, and I know that there's a lot of questions coming from the students. And so this session is not just about us speaking about what we believe the markets are doing, but answering questions that the students are going to be posting as well. So just so a heads up, students, go ahead. Post some questions. We're going to go ahead and get those questions delivered to us. We're going to go ahead and address it. But we're definitely going to talk about what's going on right now in the market, especially stock market, coronavirus. How is this all coming together, and why is it exciting to go ahead and trade Forex? So, Chris, I'm going to go ahead and get you to get started on this because I know you are deep in the details on the coronavirus. What's going on right now?
Well, first, let me just confirm on a couple of sound checks here. Can you confirm for me, Aaron, Tyler?
You're coming through loud and clear, my friend. Right.
I have Australian dollar across the board. I have some amazing technicals. And Gary and Tad, we spent a lot of time early this year talking about the 2020 kickoff event and talking about what we're doing this trade this year. And, you know, we knew that we were going to deal with a lot of noise, a lot of news, a lot of random things. We had this crazy melt-up last year from August to this year. We expected there to be maybe a strong push to start things off. I think he gave the market a sense of all hope. So stock market started off with 3-4% rally. Just moved at the 8 to 10% correction this last week. So,
hey, Chris. Sorry, I'm seeing there's a possibility that the stream is not coming through on the audio. Let me go ahead and double check on this and see if there's something that needs to be done on my end here. It should be good, but I'm going to double check here. Stream, sound, system, default speakers. Go ahead and let's just see here. Let's go get another check here. Let's go ahead and confirm. Yeah, go ahead and confirm the
dollars. No big deal.
There we go. Speak again.
All right, let's try this again. Traders, go ahead and type in the chat for us if you can hear me. Yep. So I've got Julian, Steve, no sound, weak sound. All right, let's get some
comments
comments there. Aaron,
that
Steve, good,
right
working now. All right.
Okay. All right.
Well, traders,
fantastic.
You missed the secret sauce of the magic formula.
So go ahead. There we go. Go ahead, buddy.
All right. So I guess I'll just start over. So all I was saying is that we spent, all of last year, starting off in 2020, thinking, look, we had a lot of news, a lot of noise, and what are we going to do in 2020? This is a U.S. election year. We had coronavirus, we had trade war, we had interest rates, central banks, a lot of things that were just kind of in the peripheral, and nothing was able to derail the markets. And then finally, we started to see this inevitable correction, the reality of the market setting in. I read a really interesting article this week and shared it with my trading room about, the forward weighted PE ratios, and we're at like the fourth all-time highs that go back to like the highest point ever in the U.S. markets were back in 2000 and I think it was 2001, 2002, or maybe like right into that 2000 crash. And here we are, at the fourth highest level of basically earnings without the support. And you take that with corporate debt levels, you take that with coronavirus that's potentially threatening economic expansion. I think this was a very sober dose to the market. And so we've seen what we typically see in the markets with the mood and the sentiment, which is an overreaction. We're watching the coronavirus counter every single day to see how many cases. It's borderline pandemic. But look, we're traders. Okay, so what this is creating is volatility. What this is creating are movements and technicals that we've been waiting for. I've been waiting for a technical correction in the stock market for the last 6 to 12 months. We've been waiting for big moves in the Forex market for the last 3 to 4 months. And February's been a wild ride. We've literally seen like straight down movement, straight up movement. We've had some really good volatility, which has been much, much better than low volatility. And, my story right now, as far as where I'm at with trading, is I'm trying to follow the technicals. I'm pretty into the Aussie dollar right now with some technicals. I know that right now those positions don't look great, but I am curious to see what's going to happen to start off, this next month in March and how we get through Q1. And then, Gary, I know you and I are on the same page, Tad as well. April and May, all about trends, all about following to see what type of big moves and volatility we can get to take us into summer trading. I feel like from now until May, we're going to kind of set the tone and set the trends that might just drift through most of the summer. And if we can have a strong Q1 and a strong start to Q2, I think we can take that momentum, take those earnings into the summer, and then most of the rest of the year, and this is, again, my opinion, the rest of the year is going to sit post-summer on the U.S. election. As it gets heated, as the Democrats figure out who they're running, their winning candidate is, and then, of course, we deal with everything from the U.S. election in November. So I think it's really important that traders do whatever they can to tune in, stay engaged, and be as active as possible over the next couple of months, because I think this really sets us up for success for the rest of the year.
I like it.
All right, I'm gonna pass it on to Tad. Tad, and then before I go ahead and start getting you active right here, I want to make sure that the sound is working correctly here. So just make sure that we're getting sound coming through. Confirm the sound by just I can probably hear you.
Can you guys hear me? Hey, Gary.
I hear you perfectly. Let's go ahead and get the team to confirm this. Aaron, if you can just go ahead and confirm that Tad's coming through loud and clear. You should be good, but we want to make sure. Go ahead and speak, Tad.
All right. Can you guys hear me now?
Yep.
Hello, traders. Are we good?
So Tad, yeah. So going on what Chris was speaking about there. What can you add to that?
I'd like to hear more about what Chris thinks on the Aussies, because I've talked to a lot of students in different classes, and we're looking at the Aussies being at a lot of support levels. If I'm not mistaken, the Aussie dollar is approaching a 10-year low. Have you seen that, Chris? Yeah. So, I mean,
yes.
We are this decade level of support. Yeah. And if you look at all of the Aussie pairs, they've continued to come down bearish for the most part. Beautiful looking downtrends on the monthlies and the weekly charts. And I even hit a D extension over on the monthly chart. So I'm watching the Aussie saying, when is this going to turn back? Is it going to turn back? And also, we have that wild card out there, which is coronavirus. What's going to happen with that? Is it going to blow up? Is it going to be contained? And we just don't really know right now. You're getting mixed signals from the government, from the CDC, and we just don't know. So there is that big uncertainty where things could change from what they are today to where they are next week, depending on what the news does. So you have to keep your eye on that. The technical patterns aren't always going to follow along if there's a major news event or a major world event like we have going on right here. So that's what I have my eye on, Gary.
Right, and if we have to go ahead and continue talk about the market movement, we've had a lot of movement out of the euro crosses this morning. In fact, if you look at the euro Canadian dollar, the euro Canadian dollar dropped a few hundred pips and then came back and rallied up a few hundred pips. So, what is your view on, guys? What is your view on the euro movement this morning?
I'll go ahead and start us off, Tad. So it's interesting, you say a few hundred, Gary. It was 500 pips, man. It was 500 pips down from 47 down to 42, now 42 back to 46. Like 500 down, 400 up, 13 straight bearish candles down, and 7, actually I think today's the 6th or 7th day straight up. Euro dollar 108 to 110 straight up. Euro Aussie from 66 down to 61, now straight up to 61 to 67. Like, it's literally V tops, V bottoms across the board in these euro pairs, and it's amazing. And what's funny is, Tad's mentioning the uncertainty about coronavirus. what do we have? We have coronavirus actually making its way to Europe, and somehow Europe's like, oh yeah, it's fine. Come on, bring it in.
Mm-hmm.
You know, bring it on the coronavirus. We know how to handle it. Like, we have universal health care. I don't know. So it's
right.
been
And if you take a look over here, take a look at the charts right here. This is what's going on with the charts. This is what we spoke about right here. So look, this is the daily chart. I was already just referring to the last while, but you're right. Look at that, 449 pips right there, and then another rally of another 480 pips here on the Euro CAD. This was a pretty wild ride. And we've seen across the board, right? This is across the board with all the Euro crosses. Let's take a look at a couple of more Euro crosses right here. Yeah, we have
Euro dollar, Euro Aussie. You take a look at any, like Euro Aussie, Euro CAD, Euro dollar. Those are all great, like straight down, straight up. Like just complete reversal. Yeah.
Yep. There's the Euro JPY. There's the Euro Aussie right here, blown through the resistance there. Look, we held up in a bit of consolidation right here, but actually what's really held is the trend. The trend is holding up. Looks like we're heading to the top of the channel, which means that we could be heading all the way up here to 170.75, 176 on the Euro Aussie. And so if you look at the daily movement that we've had now, it's been mostly weak pound, but a slightly strong, slightly weak Aussie. But look at the euro. The euro is really taking off. That's the strongest currency we have right now.
It is. And, you know, one of the things I was looking at, you're speaking of this channel right here you have on the Euro Aussie. On my weekly chart on the Euro dollar, I have a nice bearish channel as well. And the market came down. It formed a bullish shooting star last week. We have an RSI that's in the buy zone. And today, this week, it's forming a morning star. So, I mean, you have two candlestick formations there. Euro dollar is working its way up towards the top of the channel. So we did get that big boost today, which is pretty impressive.
Yeah. Now I know that Chris, you're in, or at least holding on to Aussie US dollar, right?
I am.
So I'm going to go ahead and jump into the dollar index. What do you guys think about going now? Now this is again, you know, we heard Trump speaking about the coronavirus and saying that there's only like 57 people have been affected by the coronavirus. Hold on.
Uh-oh.
No,
Gary.
I'm just kidding.
58 people.
59?
I'm just kidding, man. Oh, listen here. But so it looks like that the U.S. is not quite, so affected as we have with the Asian countries that are having these coronavirus issues. So if we take a look at the way the market's moved on the Aussie, all the Asian pairs, Aussie, New Zealand, JPY. We've actually seen a little bit of strength out of the JPY, believe it or not. But Aussie is definitely weak. We have New Zealand dollar weak. Is this affecting the markets from a risk on, risk off appetite, Chris?
I think it is, but the one thing that's kind of thrown me for a loop is over the last 6 or 7 months, we've pretty much seen the stock market in lockstep with the dollar, which is usually a correlation that's not the case. We don't usually see a strong bullish stock market with a strong bullish dollar, but we've actually been seeing that for the last couple of years. So, you know, in my opinion, where we are with the stock market, where we are with the bond market, I'm watching the 10-year, the 20-year, the 1 to 3 year, short-term, long-term bonds, where a completely opposite happened. In fact, one of our traders that's probably in a lot of our rooms here, Denise, sent me an email. We've been using this. We checked this during the FOMCs. We've been looking at the CME group, and they just actually had an update. I don't know if it was this week, but they're looking at a potential shift into the U.S. cutting rates in March. We were, the Fed cut rates 3 times last year, and we kind of keep this like CME group tracker on the Fed. And it just went up to like 54%, I think. Like 54%, there's a chance for a rate cut going into March's FOMC, which last time we checked it, it was like 90% that they're not going to cut rates. So if that's the case where, we're talking about the technicals of coronavirus and what it's doing to the stock market, what it's doing to sentiment, the dollar, if it's been in lockstep with stocks, hey, if the correlation is now real, then hey, if we have bullish stocks, bullish dollar, and then we have bearish stocks, bearish dollar. That is something I'm asking. It's weird. It's a weird correlation because still the dollar offers yield, but then the Fed possibly falls in line with a rate cut. And if they start to go backwards and start to backpedal more and cut rates and be more accommodative, then we're talking about a weaker dollar, which matches your chart, Gary.
Sure, absolutely.
Yeah.
And hey, listen here, students, if you have questions, go ahead and make sure that you post those questions. We've got a team of guys watching those questions, and they will go ahead and send those questions to us so we can go ahead and address it. So the one thing that obviously, I mean, we can talk about news, and we can talk about how the markets are going to be affected by the news, but at the end of the day, Tad and Chris, we are technical traders, right? And so we always follow the technicals. And the one thing that I always say in the trading room, listen here, let's listen to what the news is doing. Let's understand what's going on. But really, when it comes to trading decisions, and I'm going to give Tad a chance, and as well as Chris, to describe exactly how you trade. And I know that I'm a trader based on support and resistance. Prices at support, I'm buying. Prices at resistance, I'm selling. And I'm using automation in order to be able to, to be able to assist and help with those trades, because I can't sit and watch the market 24/7, right? And so we actually went in a couple of trades, and I'm going to go ahead and flip over to the chart right here. And we had a couple of setups right here where if I go to, let's say, the Euro, I think it was the Euro Aussie right here. Yes, it was. So the Euro Aussie right here, as a typical example, I would be looking to sell as soon as price comes up to the top here. Now, I know that we're in this trend, right? You guys mentioned here that we're in this channel. And I started thinking about selling here. Now, one thing I want to make sure about is when I start thinking about selling, doesn't necessarily mean I'm actually selling. It means I'm deploying my trading system in that direction in order to be able to sell the market short, all right, when the logic lines up. Now, if it blows through like it is right here, this is a great opportunity for me now to reverse my trading decision and wait for price to come back to support, and then start trading it going long. And I'll go ahead and start deploying my systems going long to pick up those trading opportunities. Now, that's how I trade. Support and resistance, very, very important. Tad, what is your approach now as we're starting to head into the summer period? We're not in the summer period, but as we start moving into the summer period, are you going to be changing your way of trading based on the news, or are you going to stick to a certain strategy that you are comfortable with?
You know, Gary, one of the things that I tell our traders, especially our new traders that start out, that sometimes feel like they're overwhelmed with all of this knowledge that we're presenting them with, is to find a strategy that works, that's easy to use, that's simple to use, and easy to follow. And what I find is the counter trend line break strategy. It's such a simple strategy to utilize. All you have to do is identify retracements in the market. If the market's in an uptrend, look for the market to pull back. Right here on the Euro Aussie, for example, is that a 15-minute chart or a 30-minute chart? I mean, if you were just to draw counter trend lines across these retracements, every time the market pulls back, you draw a little mini trend line. For those that are not familiar with the counter trend line, it's a trend line in the opposite direction of the overall trend, i.e. counter trend line. So all you're looking at doing is just trading the market when that breaks through. I mean, as Gary's drawing out right here, look at all that opportunity. It's a very simple strategy. It's easy to follow. Now, what I do for my targets is I like to use Fibonacci's or support or resistance or the top of channels or the bottom of channels. But the entry is the same. A counter trend line break in the direction of the overall trend is a fantastic and easy strategy to utilize as long as you're trading it in the correct direction.
Yeah, I would agree. And Chris, your approach now, coming back to Tad before I go to Chris, right? Tad, are you going to stick with that strategy throughout, when the markets start maybe thinning out towards the summer, and then have larger breakouts because of news really going ahead and disrupting that contraction phase of the market? Are you going to continue to follow this strategy?
Well, it depends. If the market does adjust and change, I'm going to change with it. So if the market does go range bound, then I'm going to switch to smaller time frames and trade within those overall ranges. So selling at selling at resistance, buying down at support, similar to what you were showing earlier, Gary. So it really just depends. And what I've told traders is if I was going to sail across the Atlantic Ocean over to the United Kingdom, well, I'm going to chart my course ahead of time. I'm going to set my sails to capture the wind. Now, if the winds change, I'm not just going to keep my sail in the same direction. I'm going to adjust my sail to where the wind is so I can continue on the same course.
Yeah, makes sense. And Chris?
I love it. I just got it. I said earlier, I just checked that same CME Group tool. Now we're looking at a rate cut at 67% for the Fed next month. So literally like an hour ago, half hour ago, it was at 54%. Now it's up to 67. So it looks like we're starting to see the market consider that the Fed is going to start taking some action to kind of, and it's not, look, it's clearly not containing. The Fed is not the CDC, right? The Fed is the bank. So it's like to contain the sentiment, to contain the fear that, oh my gosh, the markets are just going to collapse and implode. There's clearly, like Tad said, a lot of uncertainty surrounding all this stuff. I'll go back to your question, Gary, with the strategy. Look, I'm on higher time frames all the time, daily charts, weekly charts, and that's why I can't not be trading the Aussie right now. Like, yes, I understand that. Look, the Aussie might be in for some more trouble, all right, but it's already pushed to points where I'm like, man, I've seen this for years and years and years with technicals that don't fail. So why would I all of a sudden think right now that it's time to get out of these trades because it's going a little bit further? And so I'm looking at your Euro Aussie chart, and I'm in that thing. I sold it at 66.50 with a pending sell, and I told traders, look, I'm going to wait for the end of the day. I'm going to wait for the end of the week. I'm going to give it a little bit of time just to see, because look at what we just saw on the Euro CAD. We saw straight down movement, straight up movement. What are we seeing on the Euro Aussie? Straight down movement, straight up movement. I wouldn't be surprised if that somehow comes back down to balance a little bit, or we go straight down, straight up, and then back down again. It could just be like a wild ride of volatility. So I am trading smaller. That's one thing that I'm doing for my strategy right now. And then as we have some established direction, it's funny that as Tad was going through those counter trend line breaks, Gary also had that perfect kind of automated trend line support, dynamic support, and every time you're drawing a trend line, it's right there on those pullback levels. In fact, Gary, if you show that screen again,
yes,
where those, look at how you turn from red to green. Red to green. That's the same thing that Tad's mentioning on that counter trend line break. It's so simple. A caveman could do it, right? That's the old commercial.
Exactly.
But it is simple. So it's like, I mean, whether you want to use systems or automated strategies or indicators or just draw them, it's like you can see how simple this is, but direction is the key. So, keeping in tune with the higher time frames, knowing where support resistance levels are. And at the end of the day, that's all price does. It just goes back and forth between support resistance levels. Now, there might be big levels, there's intermediate levels, there's tiny levels. But again, at the end of the day, that's about as simple as it gets. And that is really good trading, is just keep it really simple and keep it effective.
So we got a couple of questions, and one of the questions came up is, Gary, where's your beard? Listen, I had it going this week, all right? I had it going this week, but I eventually had to cut it loose, right? I had to cut it loose. It wasn't me. So I'm now beardless, all right? So Tad and Chris, I'm sorry I'm not part of the club anymore. It is what it is, okay?
All right. Well, I miles north of you guys, and so I just end up spending like 45 minutes to an hour with my electric shovel plowing through like 8 or 9 inches of snow. So I've got reason to have it.
Okay.
It's like Rocky IV up in here.
Yeah.
That's good reason. All right, so let's go ahead and talk about another question that came up. What is our long-term view on the New Zealand US dollar, New Zealand Swiss franc, and explain the slippery slope of the JPY? So let me go ahead and flip it over to the actual New Zealand JPY. Actually, let's go New Zealand US dollar first. And hold on, down here. I'm going to go to the large time frame. I always look at, guys, I know we always look at different time frames to discern what the markets are doing. So this is what I have right here on the New Zealand US dollar. My thought is, and you guys can share your thoughts as well on this, right? Just looking at this chart alone, my thought is, hey, listen, we're holding at support right now. And if we continue to hold that support, I am expecting dollar to start weakening at some point in time. So if dollar starts weakening at some point in time, then this range may still contain itself, right? Which means that we could start seeing price start to work its way back up all the way to 7,600. Now, I get it. Fundamentals could change the way the market could move. But right now, as the technical hold support, I'm going to be looking to buy options only. Now, this is going to be obviously a correction move that I'm seeing right now. As soon as price moves below the support, then what's happening is then I'm in a valid downward trend, and I'll start following the trend. But up until this point, if this support level right here, and if I see support right here, continue to hold at around about 6,200, I'm going to continue to look to buy towards the upside to 7,600. Now that is what? That is 1,400 pips going long. That's what I'm looking at from a long-term perspective on New Zealand US dollar. Chris, I'm going to shoot off with you first now. What do you think about the New Zealand dollar long-term direction?
Yeah, I'm the same way. And so what that little pattern where you have the green arrow, to me, that's like the head to neckline. I'm looking at like a potential head and shoulders that's bullish off of that support. I love the range. I also, again, conservatively, there's always ranges and then there's always midpoints. So what's the halfway point there, Gary? Roughly 7,000, is that right?
Yeah.
So if we started going back up, like the middle of that range would be roughly 7,000, right?
Yes.
Yeah. So I think that the dollar can still make traders squirm a little bit. I think the dollar can still, even though we're technically looking for a cut and possibly the cut from the Fed or looking for a bearish move on the dollar, I wouldn't be surprised if the dollar just comes down to those lows, tests those lows, maybe even closes below those lows. But then shortly after we see reversal and it still maintains. If you look at and again, this is why we consult higher time frames. It could be a weekly candle, it could be a monthly candle. We're about to end February, and it's a deep right shoulder as I see it right now with that inverse head and shoulders because we have this big pullback. But if we start holding these current lows or we end up testing those lows at 6,200 again, as long as that support level holds within reason, I am definitely long. In fact, I'm in 2 positions near those lows and just sitting on them right now, just looking to see if we get back to 69 to 70. And I would love to get that thing to 75, 76.
Oh yeah, absolutely. Tad, what do you
Oh, yeah.
think?
I agree with Chris. We're looking at the Kiwi dollar, and we are less than 200 pips away from an 11-year low. Less than 200. That's not that much. We've seen the market move more than 200 pips in a lot of currency pairs here today. So
Right.
If you want to be a bear and sell, you have to say, what am I trying to do? I'm trying to go against everything that the market has bounced off of over the last decade. So
Sure.
I'm waiting for this to come back up. We're in a bearish channel. I think we're going to see, like Chris said, it get down to support if we see the dollar strengthen a little bit more. But ultimately, I like the dollar pullback. The dollar is definitely due for a pullback, and I think it's only a matter of time. And we have so many dollar charts and also just other charts like the Aussies that are all due for that pullback coming soon.
Mm-hmm.
Right. Okay, so let me flip it over to the New Zealand Swiss franc. I think that was the other one right here that we're looking at. New Zealand Swiss. Let me go ahead and open up that chart. And again, sticking to the daily time frame, I see this long downward trend line right here. Go ahead and tell me what are your views here, Ted?
All right, Kiwi Swiss we're looking at?
Kiwi Swiss right here, yes?
Yeah, Kiwi Swiss. I mean, right there, just looking at that, we have this bearish channel, and it's a pretty tight channel looking at the daily, and we're getting very close to the bottom of that channel line. If you look at the Kiwi Swiss, if you expanded that out, the market just took out a pretty major level of support back from August 2019. Now, if you expand that out even further, you don't have that many levels of support to go. I mean, we're in the neighborhood of support around 6,100. You have that major low of support that occurred back in 2015, if I'm not mistaken. And then really beyond that, it's got to come back up. I mean, the Kiwi Swiss, where it's at right now, near major support. And that major support, if you went to it, look at that wick right there. I mean, the market spiked way down and came back up all in that same day. So I don't even really treat that as a major support level. It's more of like a fundamental announcement. Or what date was that exactly? Do you recall, Gary?
That would have been August 2015. That was an oil spike there, Gary. That was an oil flash crash in 2015.
Oil?
Yeah, so I mean,
yeah. Back in 2015, that big spike should have been an oil. Yeah. All the commodity pairs. We had Aussie and New Zealand pairs. August 2015, big. That was when oil hit $23 a barrel, and then we went to 70. So that was like the bottom in oil back in 2015.
Oh, yeah,
so if you look at that, if we disregard that one-day spike, the market's already at that support level before that spike happened. We are literally sitting right there in the neighborhood of all of those past levels of support. We're at the bottom of a bearish channel.
Well,
we're at the D on the
daily. We were in some trades this, you see right here, we were in some trades today, and I actually closed out. Look at that. We had 4 positions short on New Zealand Swiss, and I just didn't like where we got in. We got in at this entry point very, very low, and I made a decision today, said to the guys in the trading room that I'm out, man. I'm getting out of this right here. We're only a few pips up on this, but I don't care. I don't like where it is, and the reason why I didn't like where we're at, because what happened was we got in just after this breakout right here, very late on this run. And so when I'm looking at this chart right here, I'm thinking, man, this thing has scored a point. Look here, bears scored a point against that low, that low. we got to start pushing back up again. And I just don't want to get caught up in this retracement because we're going to get popped. Hey, listen here. If the market just does this and continues to dip down, our stop losses were right here in the middle of that range, right there. And so because of the stop being so close, it was just really just a matter of, hey, listen here, if I'm going to stay in this trade, I'm going to pop. I got the right direction, but I got the wrong entry point. And I think that's important right there. When we're trading, and Ted, you and Chris can confirm this, but when we trading and we identify trading opportunities, the most important thing is, of course, equity management. But also another very important thing is where we get in, right? And if the market's already moved quite a bit and you get in at that move, if your stop losses are too tight, you're going to get popped before the market continues in that direction. And you know, Chris and Tad, you guys both know, you've been around a long time, you know that a lot of traders struggle where they go ahead and get into trades. They're in the right direction, but they don't have a good entry point, which means they're going to have bad stop losses because they're trying to keep it tight to load the lot sizes, and they get popped, and then the market goes in their direction, and they're like, man, I was right. And then what happens? Yeah. It starts developing these bad habits, right? What are the bad habits? Oh, well, let me just go ahead and move my stop. Let me go ahead and add an extra 50 pips to my stop. Let me go ahead and add another 100 pips. Eventually, the market goes against them. It's actually a reversal, and they've got their stop move from where they had it at 50 or 60 pips now to 150, 200 pips. Now, I'm okay having wide stop losses as long as you've calculated that risk from the beginning and you're not making adjustments as the market moves against you. And so those are the common errors and mistakes that creates emotional decisions on trading and managing your risk on each trade because of those type of late entry points. So late entry points can really put a trader into a bad spiral of managing his account correctly because he starts getting nervous. Because if he gets stopped out, right? If he gets stopped out one time or two times and the market moves in his favor, he's gonna start making some adjustments to his stop when you see price moving back up to his levels. So I don't know, Ted, have you seen a lot of traders experience in that area as well?
I do, and I hear it from traders when I meet with them in class. And one of the things I find is some traders feel like because they don't want to put their stop beyond an A if they're using Fibonacci's because the stop is 200 pips, they say, well, I don't want to do a 200 pip stop, so I'm just going to do a 30 pip stop or a 50 pip stop. The market doesn't care what you want your stop loss order to be. It doesn't say, okay, well, Joe Smith is going to put a 20 pip stop loss today, so we'll make sure it doesn't come down to his stop. The market doesn't care about that. You have to put your stop loss orders where you give the market room to test those pullbacks without taking you out. It's not what you want, it's what the market wants. So you have to play the market's game and put your stops, adjust your stops accordingly, not just because you feel like it's a good time to make a tight stop for your better equity management.
I could not agree with you more. Chris, and yourself,
yeah.
Any experience around that?
Of course. I was just going to say it's like that is always the learning curve for most traders. You go from, starting out and trying to be, perfectly precise on entries and stops and limits to what, and this is just my own kind of personal arc as a trader, but eventually it became, I just go to higher time frames, see where all the big levels are, and just trade around those big levels where the market's most likely to have a sharp reaction. Then you take those big levels where the market likes to react and create those decent, 50, 100 plus pip moves, and you can trade those on smaller time frames. So when you're looking for scalping opportunities and you're looking for movement, it most likely happens at big levels. And that way we're not sitting here trying to scramble and fight for levels that are in between. It's easy for the bulls and bears to fight in the middle of nowhere, because nothing's going to happen. But it's like when you have big levels, yeah, sure, like the bears might go down and score their point, but eventually they're going to take their profit, or eventually the bulls come up and they're like, hey, it's our turn now. So if you look for those levels in the market, that's what I like to look at as far as structure. But I would help any trader that it's like, look, I know traders aren't comfortable trading higher time frames. So part of it's the patience, part of it's the, they don't want to take a trade and sit on it for 2 weeks or a month. I don't mind doing that. As long as I know that I've got a high probability of getting paid on it, I'll hold it. But other traders want to put in their trades, want to, put on an automation or put on a robot, get paid the same day and go about their bare business and not hold trades overnight. So, but there's a lot of ways to do it. But again, we come back to, if we can consistently find direction, I just consistently find direction better at bigger levels and a lot less noise, a lot less headache. But it's like, Gary, your charts are super clean, super simple, and that's what every trader should be looking to do in their analysis. Is it shouldn't be complex. It just should be really clean. You don't need a lot of indicators. Look at support, resistance, and trend lines. If you can get really, really efficient and proficient at support, resistance, and trend lines, you're going to do amazing things as a trader. So that's, hopefully optimism for everybody out there. I did see the question that came in, Gary. I'm sure you'll feel it here, but the markets have dropped a ton. You're right, they have. We have another day now on the stock. I'm seeing that the S&P is down another 1.8%. Dow's down over 2.33%. We've got NASDAQ down 2%. The VIX is spiking up again, so we're closing above the $30 highs. I don't know. Thoughts on this, guys? I think that is this just like the quick Band-Aid that the market needed? We needed to see an 8 to 10% dip in a correction. Back in 2018, we had a 19.7% correction. Is it just get it over with? Price it in, get it over with. Who cares? If coronavirus gets worse, fine. It's just let it happen. Let it happen. That's at least with the velocity that we're seeing right now. I feel like that's what the market would rather do. It's just look, get it over with. See how bad it's going to get.
Yeah. For some reason, I got some feedback coming there. I don't know if you got it as well, Tad.
No.
Are we good now?
No. Yes. Feedback on this, or are you talking about in the chat? I'm with you, Chris. It was due for a pullback. I'm just looking at a year-long comparison of the Dow right now. What are we at? Down to 26,331, down 625 points today. And it's coming down. It's towards a major support level at about 26,000. If you look at a long-term chart on that. So we'll see what happens. I think it's really going to depend over the next 2 weeks. Here's why I think over the next 2 weeks, because the coronavirus takes about 14. It can take up to 14 days for symptoms to be seen. So right now there's some talks of what's going to happen in the U.S. if that starts getting worse here. There's other people right now that are walking around that have symptoms that do not have symptoms. Yeah.
I'm hearing, sorry, Ted, I'm hearing a lot of feedback coming. Did you change anything on your audio? Because I'm hearing maybe you turn up your speakers or something like that. I'm hearing a lot of feedback coming back.
Let me check my audio here. Give me 1 second. I'm just going to adjust it.
Yeah. But in the meantime, while you're setting that up, yes, what I'd like to know from you guys as we start wrapping things up here, what I'd like to hear from you guys is what is working for you currently right now? How are things working over the last couple of months? January, February has been good months for me. How has it been for you? What type of trading strategy have you followed over the last couple of months? We spoke about what we're going to be doing as we head forward into the summer period. But what are we going to do right now? What are we doing right now? And what's really working for you right now that traders can go ahead and take some advice from? Chris, I'm going to go ahead and see if your audio is still giving feedback. Go ahead and chat. Let's see.
Okay. Yep. Give me a test. Make sure it's just single audio.
Tad, go ahead and mute your mic.
Okay.
Okay, Chris, go ahead.
All right, let's try this. Gary? Is this better, Gary?
No, it's not. It's for some reason it just automatically changed. Let me see if I go to my charts and all right, go ahead and speak now.
All right, let's try this.
Okay, seems like it's only on that video. Okay, go ahead and chat right here. All right, give me your views. What is your thought process for this year, or at least what you've been doing in the last couple of months? What's working for you, Chris?
Yeah. So what is working is following the confirmation and following the trends. What isn't working is some of these support resistance levels that are being tested and tried and pushed until kind of you're like, I'm a little bit uncomfortable right now. But again, here's a couple of key things that I look for. Bigger time frames, I like to see support resistance. I like to look for overbought, oversold conditions, and I like to see divergence. That's a big deal for me to consistently look for, again, not the bottom, not the top, but within reason, tops and bottoms that I can buy low and sell high and have price go my way. So, we're looking at New Zealand Swiss. We've got Aussie Dollar. We've got Aussie CAD. I've got all these great trades. We're sitting, I've got, and myself in my trading room, I've basically said, look, I'm going to get some positions started that are going to be anywhere from, 2 to 5,000 pips of cash-ins. And then we'll find some scalps during the week. We'll find some good setups here and there. I don't think we can really forecast the type of movement we've had the last 2 weeks. You look at some of the yen movement, you look at the Euro CAD, the Euro Aussie, the Euro dollar, to see a market, in the Forex market, especially with how efficient it is, it's so rare to see, 13 daily candles in a row followed by 7 in a row the other way. And it's a complete straight down move and a complete straight up move. That's just wild, crazy volatility. But at the end of the day, that volatility also spawned from oversold conditions, divergence, and a higher time frame level support. So it's still technically fine. And, we were in EuroCAD long. I just didn't take the entry that confirmed. What I did is I was like, all right, we broke the trend line. Let me get that double bottom. Let me get that double bottom. Like, be exact. And it didn't give it to us. So I closed out for like plus 10 when the thing ran, 400 pips from where we should have been getting in on that second entry. We closed out today for Euro Pound. We've got some big rides on Euro Swiss ahead, Aussie New Zealand ahead, Aussie CAD, Aussie Swiss, New Zealand Swiss. Those are going to be great trades as far as the position goes. So I'm definitely more of a position trader this year with big positions that are just small trades, build up the trades, and then let them pay us. And then in the meantime, when it comes to this next month, Gary and Tad, and April and May, I think I'm going to set myself up for as many trends and pushes and confirmations as I can get my hands on and just stay with what the market's showing me. And if I can do that, position myself for summer trading and just battle test it through whatever the market's going to throw at us with more coronavirus, more selling off, more this, more that. Just be battle tested and have some profits to show for it.
Yeah. Tad, you want to go ahead and take a couple of minutes to explain what you're doing right now?
Can we unmute him, Gary? Sorry, Tad.
Here we go. How's that?
Good.
That's better, Tad.
What I've been doing here in 2020 is really identifying channels and focusing on channels, because the market moves in these patterns, and they've been doing it for such a long time. And just by identifying a down channel, selling to the bottom of the channel, then buying back up depending on the time frame, I found very reliable and very useful and very easy to do. And I can use counter trend line breaks, Fibonacci, stochastic RSIs, and also using support and resistance for my entries and exits. So I found that has been the best thing for me so far. What hasn't been the best and my favorite this year has really been the pound pairs. With just the erratic movement of the pounds, I was expecting a pullback. The pound continues to come up bullish, and it's just there's some uncertainty on that with trading. So I've kind of stayed away from the pounds lately and really been focusing on the Aussies. But now we're at the major support on a lot of the Aussie pairs, wondering when is that pullback going to happen.
Right. And I'll be honest with you, my trading approach this last couple of weeks last couple of months has been really just focusing on trends and channels, right? And just similarly what these guys have been doing as well. Focusing on trends and channels because, as Chris mentioned, keeping it simple, right? You're keeping the charts as clean as possible, looking for support and resistance on the larger time frame, and then using the deployment of trading systems that has logic that's going to be able to trade off the 15, the 1 hour, or maybe even the 30-minute time frame, and deploying that in the direction where we're anticipating these support and resistance levels. Now, very importantly, we brought up a subject. There was a question about the pound's really been struggling since it decided to move away from the European Union. And the answer to that is yes, it may have been struggling, but look at the technicals, right? We understand the fundamentals. We understand that there's going to be some sort of reaction to the market and reaction to the pounds just because of the deal that they're trying to put on the table by the end of the year. But we're going to constantly get some movement out of the pound because of why? Because of technicals. Fundamentals are going to support that, but it's really the technicals that you have to look at. Now, if we go ahead and take a look at the technicals right here, you can see right here, and Tad spoke about the pound Aussie right here, but take a look at the technicals. This has just moved to a technical high. Take a look right here. As price tests these highs, pound Aussie has gone ahead and hit the highs up here. So what are we thinking? We're thinking price is now going to move down to the bottom of the channel again. So we may start seeing a sell-off on the pound. Why? Because of the European Union? No. This is technical, man. This is technical. Sure, we can add in the fundamentals and say this is supporting what the market's doing, but the technical analysis right now is telling us that resistance is being found on pound Aussie. Go to pound Canadian. Take a look at pound Canadian. And if we take a look at the daily right here, look what's happened right here. Pound Canadian has broken through this upward channel, tested the backside of the channel. What are we expecting? Just think technicals, traders. Guys, just think technical. Don't get yourself so caught up in the fundamentals about it. Yes, listen and pay attention to what's happened in the fundamentals. But that's definitely not going to be my decision making when it comes to trading. And this is what I've been using over the last couple of months, and I've been using this for, well, close to 30 years. So it's not just the last couple of months, but it's something I've been applying to my trading most of the time when I'm looking for trading opportunities. Keeping it simple, use support and resistance, look at the technicals. Sure, pay attention to the fundamentals, right? Because they are important, but they're not as important to me as my technical setup. When I see technical setups like this, Pound Canadian, hitting the backside of the trend line. Man, this just means one thing. Start deploying sells, right? Start deploying your EAs and trade in that direction. And have the confidence that the EA is going to do what it needs to do because it's programmed to trade your logic for you, all right? And so that we can go ahead and now. And I know, Chris, that we have some good news coming out in the next couple of weeks, but you trade a very trendy type of trading strategy called Right Trader, and it's been doing really, really well, and I'm really excited about that because these are the type of things that you would want to go ahead and say, hey man, all day long you want to go ahead and sell this. So when the market goes ahead and sets up, and maybe you go in a lower time frame, and you start deploying sells, you want to go ahead and pick up all of this going down and start trading. Just like we had this upward channel right here, you want to start paying attention to the downward channel because that's what's going to profit for you. And keeping it simple, using automation is probably something that I've used in the last couple of months, but more importantly, I'm going to continue to use that as we move forward in the next couple of months as well. So to wrap it up, guys, I want to go ahead and thank I'm going to see if I can get back to everyone here. Hopefully we don't get any bad feedback on that. But I want to go ahead and wrap it up here today. This is our first group session. I know there was a couple of issues with the audio and so on, and we'll get that all taken care of. But I really think that we're going to do a lot more of these type of things, come together as a group, share some information for 45 minutes about the markets, what's going on, what are we doing, what's working for us, what's not working for us. And I think it's important to hear from everyone. You know, Tad, Tian, Tyson, Chris, everyone gives valuable information and valuable things, and also because we trade differently. Not every one of us trades the same way. Some might be similar, but not exactly. And so it's important to get a little bit of feedback from everyone. Chris is very much into the fundamentals. Tad loves his power fibs and trend lines and counter trend lines. I'm a big trend support and resistance guy. You know, we have different types of things that we throw into the basket, but we are going to make sure that we deliver this message, send over the information to you so that you can get a little bit of more insight as to what we think and how we're trading. All right. So with that being said, guys, I want to thank you for coming in. Appreciate Chris. Thank you. And Tad, been great. We certainly will get the audio set up next time around, and hopefully see you guys next time. All right. With that being said, cheerio, guys.
Take care, everybody.
See you guys.